Most candidates don't fail private equity interviews because they forget definitions. They fail because they explain the term but miss the flow. If someone asks about capital calls, NAV, LBO, waterfall, carry, exits, or SPV structures, they are not only asking, "Do you know this?" They are asking, "Can you follow the money? Can you explain the entry? Can you separate cash from performance? Can you connect it to LP reporting?" That is what makes an answer sound senior. Use this map, the PE interview answer map. Every answer should move through 5 steps. 1. What happened? Capital call, investment, valuation, expense, exit or distribution. 2. Did cash move? Cash movement and NAV movement are not always the same. 3. What entry is recorded? Cash, investment, receivable, payable, income, expense or capital account. 4. Did NAV move? If yes, why? If no, why not? 5. What reaches the LP statement? Contribution, distribution, realized gain, unrealized gain, DPI or TVPI. Remember the flow: event, cash, accounting, NAV, LP reporting. Now let's apply it. Question 1. Explain the private equity fund life cycle. A weak answer says LPs give money to the fund and the fund invests. A stronger answer follows the journey. LPs commit capital first. The GP calls capital when a deal comes. Cash is received. The fund invests directly or through an SPV. The investment is valued. NAV is calculated. Fees, expenses and carry may be recorded. At exit, proceeds are realized. Cash may be distributed and the movement reaches LP capital accounts. That is the life cycle: commitment, call, cash, investment, valuation, NAV, exit, distribution, LP reporting. Question 2. Are capital call, contribution and uncalled capital the same? No. Commitment is what the LP agreed to fund. Capital call is the GP's request. Contribution received is actual cash received. Uncalled capital is commitment not yet called. Recallable distributions can make this more complex. A junior answer says capital call means LP paid money. A better answer separates timing: notice issued, cash expected, bank receipt, capital account updated. This is a timing question. Question 3. What actually moves NAV? This is where many candidates lose the interviewer. A capital call brings cash into the fund, but it is capital activity, not performance. An investment purchase converts cash into investment, mostly an asset swap. No immediate NAV movement. A management fee reduces NAV because it is an expense. An unrealized gain increases NAV even though no cash came in. At exit, realized gain or loss depends on cost, carrying value, and sale proceeds. Remember, every cash movement does not move NAV, and every NAV movement does not mean cash came in. Question 4. Are exit proceeds and realized gain the same? No. Exit proceeds are cash received from sale. Realized gain is proceeds minus cost. But if the investment was already marked up before exit, NAV may not move by the full realized gain. Suppose cost was 10 million. Carrying value became 14 million. So 4 million unrealized gain was already inside NAV. The investment exits at 15 million. Realized gain from cost is 5 million. But the fresh NAV movement may be only 1 million. That is why proceeds, realized gain and NAV movement are different stories. Question 5. What do interviewers test in waterfall and carry? A weak answer names the tiers: return of capital, preferred return, catch up, carry. But a strong answer runs the money. Has LP capital been returned? Has the preferred return been met? Does GP catch up apply? When does carry start? Is carry accrued in NAV or actually paid? Carry accrual can affect NAV before cash is distributed. Carry paid happens when economics are settled. Question 6. How do SPV, LBO and debt connect to PE operations? A PE fund may invest directly or through an SPV. In an LBO, debt may sit in the acquisition structure. The target company's cash flows may service that debt. So accounting depends on where the transaction sits: fund level, SPV level, portfolio company level, or acquisition vehicle level. A senior candidate asks, where is this recorded? Who owns the asset? Who owes the debt? Which entity reports the movement? Now save this checklist before your next PE interview. Did cash move? Did NAV move? Capital activity or performance? What entry is recorded? LP capital account impact? Realized or unrealized? Fund, SPV or portfolio company level? What does the LPA say? What reaches investor reporting? If you can answer these, you are no longer memorizing PE terms. You are thinking like someone who understands the fund workflow. That is what interviewers remember. Follow the fund desk for more PE and fund accounting interview guides.